Hello everyone, welcome back to All Financial Discussion channel. For this video, I'd like to continue the discussion on building your retirement fund. This video is mainly for someone who is between 35 to 40 years old. Some of you actually ask me regards on this commodities as a part of investment. I will say this, commodities in fact can be just like a supplement, cannot be the main dish of the investment. So basically for me, so if you plan to build up your retirement fund, you should prioritize with grow and value stock. So this video, I'm going to show it to you how to build this so-called grow and value stock when you are actually at 35 to 40 years old. So this will be the objective of this video. In investing, so in fact, these commodities are just the raw materials or basic good that we can be bought and sold easily. Usually for this case, they will be in large quantity. The price, in fact, will be driven by the global supply and demand. Let me give you some example of commodities. So basically we have the gold, we have the silver, and also some precious metal. We also have the crude oil and the natural gas, and also all this daily necessity, wheat, corn, coffee, etc. Let me explain how we as an investor can actually invest into commodities. So in fact, we as an investor, we don't usually so-called buy the physical item. For example, we don't actually buy the physical barrels of oil or sacks of wheat. So instead, we actually invest into these three. First one will be on the futures contract. So we actually sign an agreement to buy or sell later at a set price. So we decide on the time frame. We also decide on the price whether we want to buy or sell the commodities back to the market. So this is one way how we actually invest. Another one will be on the ETF. One of the most famous ETF for the commodities will be the gold ETF. So this is another form how we can actually invest into commodities. Last but not least, on the stocks, companies that hold stocks that are actually in fact heavily involved in commodities, for example, like oil or mining firms. So this is how we as an investor can invest into commodities. Next, why bother to have another form of investment? So the keyword again will be diversification. So in fact, for commodities, the price, they actually behave totally different from stocks and bonds. So therefore, we actually want to have another streams of investment to diversify our risk. Next, the price is often related to the inflation. So when inflation actually goes up, you can imagine that our daily commodities, in fact, also will go up. This is where we will be also benefit. Next will be on the global demand exposure. For example, because of the Middle East conflict, there is a strong demand of oil. So therefore, the price of the oil actually shoot up. So basically from here, you can see that the situation, how does the commodities price actually change according based on inflation and also the global demand exposure. Let me give you a simple example. So let's say we invest into gold. So rather than we buy the actual gold bars, which can be quite costly, we actually buy the gold ETF. So basically, we are in fact betting that the price of the gold will rise. So when actually the price of the gold actually rise, we will benefit. And after that, in fact, we can consider to sell away this ETF. So the key idea is the commodities, in fact, they are real world assets. Basically, they are something that we can actually own. So basically, this is unlike stocks. We actually have the ownership in companies, or we have some bonds, which is the loan. We don't actually own the asset. And for commodities, the value actually depends on the supply and demand. Let me share a very simple example of the supply and demands of commodities. So in fact, currently, there is a conflict in Middle East, which is USA together with Israel. they actually have some form of conflict with Iran. So because of this, some commodities, for example, those energy supply, they are actually shortage. And this, in fact, drive the price of all these assets. Let me explain how the conflict in the Middle East can in fact impact our investment. As we know now, currently, there is a conflict in the Middle East. So therefore, the commodities that usually perform best will be the one that actually tie to energy supply disruption and safe haven demand, which I will go through them later on. The first one, okay, based on the historical pattern and what actually the market are react to right now, is in fact the price of crude oil. Okay, so this is usually the biggest winner if there is any form of so-called conflict, especially at the Middle East. Why? Because the Middle East, in fact, control a huge portion of global oil export, especially through the Strait of Hormuz. So therefore, any threat to shipping routes or production, they tends to spike the oil price quickly. So this diagram here show the price of crude oil for 1 year. Basically, the conflict actually happened in the late February and early March. So from here, you can see that there is a huge jump in terms of the price. So let's say if you are able to anticipate this, you can actually position yourself over here. And after that, in fact, you will have a huge gain. So therefore, because of the conflict, this, in fact, can impact our investment also. The next one to be benefit will be the natural gas and LNG. Okay, why? Because the crude oil is in fact affected, then people will start to look for alternative, which is the natural gas and LNG. And because of this, the price will also surge, especially in Asia and Europe. Okay, so basically this is the reason why. And in fact, Singapore and those in the Asia, we are especially very sensitive because most of our import energy actually pass through the Gulf. Let's come to the safe haven of commodities. For example, gold. Okay, so in fact, gold usually perform very well during geopolitical stress. Okay, so this is because we as an investor, we want to protect our money. So when there is actually geopolitical stress, in fact, we actually will move our money away from those risky assets into something that can actually store value, which is gold. Based on the multiple recent report, this actually show that with a conflict, okay, basically a lot of investors actually will move their money into the safe haven commodities like gold. So in fact, gold stands to do best when there is a fear, when central bank in fact actually cut rates. Okay, because gold don't give you any interest rate. So when banks actually cut interest rate, there is more beneficial to buy investment into safe haven asset like gold. Next will be based on the inflation expectation rise. Last but not least, based on the equity market become very volatile. Okay, but keep this in mind because of conflict, most of the time, the oil, in fact, will spike faster as compared to the gold initially. Okay, because the energy supply, they are more direct. Next will be on silver. Okay, so silver, in fact, probably will follow gold very closely, but we expect there will be more volatility. Okay, so this is how we actually can invest if there is some form of conflict. Like for example, now there is a conflict in the Middle East. We probably can invest into commodities, like for example, on the crude oil, okay, on the natural gas LNG, and you also can consider this safe asset like gold and silver. Next, after explain what usually does well. So this slide, I'm going to explain what usually does not do well when there is a geopolitical so-called stress. Firstly will be airlines. Okay, so I guess you know that when there is a geopolitical, for example, the Middle East, okay, this can actually disrupt the airline. So this typically will not be able to do well when there is any form of conflict. Next will be the same, okay, on the shipping companies. consumer discretionary stocks also. Emerging market currency actually depend on oil import. So therefore, because of the Middle East conflict, all these probably will not be able to perform well. However, as I explained early on, there is also some commodities that will be able to perform better. For example, crude oil, in fact, will be the first to be respond when there is any form of conflict. Let's move back to our key objective of this video. Okay, so like I mentioned earlier on, how to build your retirement fund. Basically, for this video, I will concentrate for someone who is between 35 to 40 years old. So this is how you can actually allocate your investment. 70% onto the more risky growth stock and 30% onto the value stock. Let me explain. Although I have highlighted the commodities so-called investment, but for me, as I explained earlier on, okay, commodities investment in fact will be like supplement. Okay, based on situation. Okay, let me show you this. Based on situation, as you can see that the crude oil, in fact, the price of this crude oil, in fact, is quite flat until there is some form of conflict. Then you can see that there will be a huge jump. So therefore, for me, at this case, I will not discuss how to invest into commodities. Rather than that, I will emphasize on the investment for the growth stock and the value stock. A quick disclaimer, this is not a financial advice. Please conduct your own independent research and consult a professional if needed. Never invest more than you're willing to lose. With this, we are ready to kickstart today's discussion. But before that, I'd like to urge you guys to help me by like this video. Guys, if you have learned something from this video, urge you to help me by like this video. Guys, it's free. Help me. Press the like button now. For those who are new to this channel, and if you want to support me, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. If you're still able to recall, okay, so basically this is what I mentioned earlier on. I like to allocate 70% onto the growth stock. Okay, so this growth stock is further so-called separate into 4 tiers. We have the crypto, the more risky growth stock, the conventional growth stock, and the ETF growth stock investment. Okay, so let me explain. Okay, I will allocate 5% onto crypto. Okay, so in fact, I like to emphasize this. Crypto investment, in fact, is the most risky investment. So therefore, at this age, 35 to 40 years old, you still have the time. Therefore, I actually like to recommend to put 5% of your so-called fund into crypto, but not to any crypto. In fact, for me, I will only invest into these 4 major cryptocurrency. So this is what I like to explain on the crypto investment. Next, later on, I will further explain on the risky growth stock, which I would like to allocate 25%. And the conventional growth stock, I like to put 30%. And to the very, very safe growth stock, which is the ETF type, which is 10%. Let's go in more detail. Next, let me explain my choice for the risky growth stock. Okay, like I mentioned earlier on, because of the age 35 to 40 years old, you still have ample time. So therefore, for me, it is more ideal to build up your capital faster. So therefore, because of this, I actually allocate 25% onto the risky growth stock. So this is how I actually allocate my risky growth stock. 5% will be onto the moonshot. Okay, but keep this in mind, all these investment can go to zero. Okay, but if they are very success, okay, you can imagine that your stock can be like moonshot. So basically, this is what I mean. I will allocate 5% onto the categories of moonshots. Next, 10% will be on the speculative tech. Okay, so basically, this is last but not least on my next generation disruptor. I will allocate 10%. Let me come to the moonshot discussion first. I will allocate 5% onto this new skill power. Okay, why? Okay, because of the conflict in the Middle East, we see the importance of energy. And this new scale power, in fact, are building something like nuclear, which is to solve the issue of energy dependency. So for me, this is in fact very attractive, but I like to emphasize this again. If this thing fail to get through the so-called FCC approval, then this may not be sustainable. But for me, okay, I'm willing to put 5% of my fund onto this so-called new initiative based on the nuclear. Next will be on the speculative tech. Okay, I will allocate 10%. Okay, so from here you can see that I actually allocate onto quantum computing and cryptocurrency 5% each. Okay, so basically these are, in fact, they can 3 or even 10 times. If not, they can also probably crash very, very hard. But therefore, I actually put my position 10% onto the quantum computing, okay, on the IonQ and Coinbase. Last but not least, based on my next generation disruptor, okay, so I always want to put onto Tesla. As I mentioned earlier on, Tesla has so-called diversified their business. They are not only on EV, they are also on AI, or probably also concentrate on the robotics. So therefore, I see a huge potential Tesla as a next generator disruptor. So therefore, I actually allocate 5% onto Tesla. Next, something new. Okay, so basically I will allocate 5% to AMD. Why? Okay, because currently, okay, AMD seems like NVIDIA competitor now. Okay, so they are also building the AI GPU. So this is how I actually allocate on the risky growth stock. Total 25%. I will put 5% onto the moonshot, okay, which is on the new scale power. Next will be 10% on the speculative tech. Okay, I will emphasize on IonQ and Coinbase, which focus on quantum computing and cryptocurrency. Last but not least, my next generator disruptor, I will allocate 10%, Tesla 5%, and AMD 5%. Okay, so let's move on to the convention growth stock. Next will be on the convention growth stock. Very easy, just 5% each to the Magnificent Seven. Okay, so basically include the Tesla earlier on, which I have classified. So for me, Tesla, I will classify them as next generation disruptor. Okay, so but for this case here, these are the Magnificent Seven. I will allocate 5% to NVIDIA, 5% to Microsoft, 5% to Google, 5% to Amazon, 5% to Apple, and 5% to Meta. So from here, you can see that they are either concentrate on the AI or in fact, they are the dominant tech leader currently. So this is how I actually allocate my conventional growth stock, total 30%, 5% each onto the Magnificent Seven. At this age, 35 to 40 years old, you probably like to concentrate a little bit more onto the growth stock. But for me, okay, the value stock is equally important. So this is where you start to learn on the value stock that actually give out the dividend. So for me, this is also an essential part to build up your investment portfolio, even you are actually at 35 to 40 years old. So this is how I actually allocate for my value stock. Okay, I will allocate banks 15%. I have mentioned early on, Singapore, in fact, has a lot of good value stock. So for me, I will invest all my value stock into Singapore stock. So therefore, for me, firstly, on the Singapore banks, I will allocate 15%, 5% each to the Singapore biggest bank. For example, 5% to DBS, 5% onto OCBC, and 5% onto UOB. So this is firstly how I actually allocate my value stock. Total 30%, 15% go to Singapore banks. Next will be on risk. Okay, so risk 10%. Why I put on risk? Because risk and Singapore banks, they actually move in different direction. When interest rate rise, the bank will benefit. When interest rates drop, risk will benefit. So therefore, they actually complement each other. So how I actually allocate my Singapore risk? I will allocate 5% onto CapitaLand integrated commercial trust, and I will allocate 2.5% onto Mapletree's logistic and another 2.5% onto the Ascendas REITs. Basically, from here, you can see that REITs typically will command a higher dividend yield as compared to Singapore banks. So therefore, invest into Singapore REITs is also very crucial to build up your passive income. Last but not least, I just put 5% on my defensive. For me, I will recommend on Capital Infrastructure Trust 5%. This capital infrastructure, in fact, has the highest dividend yield throughout the whole recommendation on the value stock. Okay, so but for me, okay, it is always very important to have a form of defensive also. So therefore, for me, okay, for example, these two stock, in fact, will perform better if there is any form of crisis. Okay, but for me, okay, because of this age, 35 to 40 years old, I like to emphasize a little bit more risky, so I put on more risky dividends yield, okay, which command a higher dividend. So this is how I actually allocate my fund on the value stock. Firstly, I will allocate 15% onto Singapore banks, 5% each to DBS, 5% to OCBC, and 5% to UOB. Next, I will go to REITs, total 10%. You can see that I mainly want to allocate a higher portion onto CICT, okay, because they are in fact much more diversified, and you can see from here they are actually into Singapore property. And how I actually choose the REITs, in fact, you can see that they concentrate on the property, they concentrate on the logistic, and they concentrate on the industry. So basically, I also diversified my risk onto the REITs. So this is how I allocate on my risks. And then last but not least, in some form of defensive stock, okay, I actually choose Capital Infrastructure Trust. But like I mentioned earlier on, it is up to you whether you want to choose the other two or not. With this, I'd like to end my discussion. Please help me to like this video and subscribe to this channel. Once again, thank you so much for your support. I hope to see you guys soon. Bye for now. Thank you so much.